let me just take this opportunity to welcome everybody who's here for this webinar today, and more importantly, to thank our panelists and our guests for giving of their time and sharing their expertise with all of you. The American FinTech Council is now grown to almost 150 members, responsible innovators from every aspect of the financial services ecosystem, including FinTech companies and innovative banks. We're nothing without the people we surround ourselves with, and we're so excited to be working always, but especially today, with the great firm of SheppardMullin. AJ and Mooorari and the entire team of Sheppard have been just tremendous assets to the American FinTech Council and to all of our membership. And I will say that, again, I think you're going to get a tremendous amount of value here, but they're a firm that works tirelessly every single day, providing leading expertise. And it's just a pleasure for us to get to work with them, and just so happy that they could be here today and lead this panel, branching out the growing power of bank-fintech partnerships. With that, AJ, again, you kind of took a shot with us at the American FinTech Council. You've been now a partner for, I want to say, a year and a half, almost 2 years, and it has just been growing and getting better and better. And so just thank you for everything you've done, and Mooorari and everybody else. Again, we really, really appreciate the partnership.
Thanks, Phil. Yeah, we haven't looked back, so I appreciate having us join the team. Well, good morning, everyone, or good afternoon for East Coast friends. Thanks for joining us, and thanks to the AFC for allowing us to present today on the future of bank fintech partnerships. We're diving into how banks and fintechs can work together by using tools for ongoing due diligence to enable efficient and compliant growth. My name is AJ Dhaliwal. I'm a partner at SheppardMullin, based in Washington, D.C., where I focus on consumer finance and fintech, namely by providing regulatory advice and counsel, but then also work on some enforcement issues for our clients as well. Guy, Lisa, Mooorari, and Sam, I'll let you all introduce yourselves, maybe on my left anyway. Sam, you're first. You wanna go first?
Sure, thank you. I'm Sam Martindale. I'm the CTO and founder of Afterman Software. We are a boutique consultancy specializing in helping community banks that want to work with fintechs. So we've been working in this space for about a decade here across the US, specializing really in architecture development and the technology associated with this space.
Great. Guy, you're up.
Awesome. Thanks for having me. My name is Guy. I'm the founder and CEO of a startup called Blee. Blee is an AI regulatory compliance platform. What that actually means is that we're taking regs, policy guidelines, enforcement actions, and ingest them into machine-readable rules that help us support legal and compliance officers. Our focus right now is marketing and advertisement content, helping companies like Rocket and others really, review thousands of materials and do that in a compliant way. So I'm giving the AI technology aspect. So excited to be here.
Awesome. I'm Lisa Roitman. I'm the general counsel of Rocket Loans. Looks like I froze. Sorry, I'm the general counsel of Rocket Loans, and we provide personal loans and a bank partnership with Cross River Bank. So very happy to be a member of AFC and appreciate being on the webinar. Thanks to SheppardMullin for this.
Yeah. And I'm Mooorari Shah, partner in SheppardMullin's Orange County office, as well as their San Francisco office. Find myself in between the two often, as you can imagine, pretty well joined at the hip with AJ. So we cover the East and West Coasts in terms of all things fintech and consumer finance. And we've grown quite a team here at SheppardMullin, which we're pretty proud of, and always happy to join AFC to provide these webinars and really just to engage with this fantastic trade group. So AJ, I'll kick it back to you.
All right, great, thanks everyone. So today we're going to explore the future of bank fintech partnerships by focusing on the technology tools that power them. So at the core of every successful collaboration is the smart use of technology to drive growth and ensure strong compliance. So today we're going to discuss how to integrate these tools into our legacy systems, including AI solutions, and then dive into some strategies for staying audit ready and maintaining robust oversight with real-time monitoring. So as you can see, with today's lineup, we have some folks here who really live in the trenches and can provide some valuable insights. So let's just start to kick things off here. Guy, let's first go to you on the topic of sort of this AI-driven compliance and trust building, as we've talked about it, and more specifically, how Blee uses AI use cases like content and marketing reviews to help establish credibility and then sort of opening the door for deeper collaboration.
Yeah, so when we started looking into areas of focus, there were a lot of considerations because I think there is a lot of buzz around AI. But when you look into the applications, all of a sudden you have to consider, well, how much risk is involved? How much PII or data is involved? And where would be a good area to start? And for us, a couple of things that made sense when we qualified, ourselves as a technology partner was first and foremost thinking about where is an area that has a need, that has, some form of a lot of manual work currently that we can try and help with. And marketing and content review made a lot of sense for innovation because it's a space that haven't seen one for a while. But then at the same time, you see a lot of manual overhead inefficiencies. And yet at the same time, you see pressure coming in from the business side, looking to grow, looking to do more than just, A/B testing, or in the context of Bank-Fintech partnership, just having one partner, but you want to bring in more partners. And so there's this constant element of we want to grow, but then at the same time, there's risk. And we thought that's a really interesting problem space to try and tackle. And so for us, it made a lot of sense to, build solutions that can help with those somewhat slower processes to really try and make our users sort of superheroes that can start move way faster, but yet keep that level of oversight the same as it was. And by doing so, becoming almost enabler of the business. So that's how we thought about an area that is really interesting. There are, of course, others. But I think that we found that this makes a lot of sense for this ecosystem right now when there's this pressure to grow.
Yeah, and I want to pull one of your superhero users into this conversation. Lisa, can you maybe, follow on to that discussion from Guy, but then also draw on your experience at Rocket, in terms of what accuracy thresholds or performance standards you demand from AI compliance tools before you adopt them as well?
Yeah, sure. No, it's a good question. And I would say thank you to Guy because they are a very good partner for us. And, look, I think that there's increasingly complicated state and, regulations and interpretations. And so in addition to just helping with, sort of speed and reducing sort of the component of how many people you need to do a certain task, there's also the level of complexity that's sort of becoming the norm. And when, in addition to being able to review things with speed, I think a lot of what you're seeing is the need to also be able to account and audit what you've done. And so to me, the real, one of the biggest benefits of trying to incorporate ever increasingly sophisticated technology, including AI tools, is to be able to do exactly that. Having a easy workflow tool, something that can be shared. We're in a bank partnership, so it's not like it's just sitting on your books. It is something that you're going to have to, produce for others to look at. So that has been, incredibly important, and that's, I think, what drives some of the bar to how effective the tool is going to be. And how easy it is to, communicate. That's really, I think, the most important things that we think about.
And that's a really good point. I don't think, people really take into account how large the ecosystem really can be in the partnership. It's not just a one-way or two-way street. There's other parties involved as well. Sam, can you talk a little bit about, Afterman and with environments and in legacy systems, how do you balance introducing AI-based workflows while ensuring reliable and sort of predictable outcomes?
Sure. Yeah, so I think when adopting AI within a highly regulated environment like a bank, I think it's probably most important, at least at this point in the journey, to make sure that we're biting off lower risk use cases or areas that are at least kind of cleanly segregated enough from everything else that we can make sense of what happened as we try to analyze and have to maybe report or explain to a regulator what was done later or why a decision was made. I think for a lot of these use cases, at least at this point, it's also important to start with maybe keeping a human in the loop on a lot of these types of things as well, and not just letting it run wild. But this is all how it applies to the bank operations. I will tell you as well, there's kind of a whole second area that we've been using AI in my organization as well, and that's to just try to provide more value to our clients in the banking space by using it to try to assist us in our testing, in our development efforts, and try to speed up our deliverables from a development standpoint. Again, same rules kind of apply though, right? Like we don't want to just let it write a bunch of code and walk away. We typically pair it with a senior engineer and do a lot of reviews and need to be able to explain exactly why these test cases passed or failed and all those kinds of things before we hand it off to a regulator. But I think it's kind of an important distinction, right? That there's kind of two ways in which we're seeing this applied right now. One is within the business directly. What business cases can this actually be applied in and serve the business? But then also, how can we use it in our technology endeavors to speed requirements gathering, writing, testing, speeding up development, unit testing, other types of things. Kind of two areas, right?
Yeah. And sometimes those humans in the loop need to be outside counsel. So Mooorari, I'm curious, when you're advising banks or fintechs on an AI-driven compliance solution, sort of how do you evaluate the risk profile and counsel our clients sort of on a go-forward basis?
Yeah, it's interesting. If you look at the Bank-Fintech journey, partnership journey, going back a decade, maybe more even in some cases, over time, especially with enforcement actions against both fintechs and banks, more recently, certainly a lot of them, there's a level of distrust that sort of develops over time, notwithstanding even robust contracts and so forth. So to Sam's point and some of the other points being made, sort of this approach of starting small and building trust through the technology on both sides, both with input from both sides, but also sort of, understanding that the bank has certain needs and the fintech is looking to gain efficiencies through that process, and using sort of low risk, without customer information or non-sensitive information as a starting point to run some of these models, and then building from there as much as you can sandbox and iterate and so forth and get it right out of the gate on something that everyone agrees on, really sort of helps rebuild the trust, and also gives a much better story for the bank's perspective when a regulator comes and says, "What have you been doing?" And you can show them the whole documentation and sort of the whole roadmap that you guys went through to get to this stage. And then obviously the fintech as well benefits from that. And ultimately, both sides get what they want, a fully functioning system, if all goes according to plan, and iterations with the human involvement. So, I mean, contracts, typically do have sort of governance structures and so forth, but over time, those tends to shift away from sort of their original purpose, and technology in a lot of ways can kind of bring you back to center and then iterate on the expansion of that as the different technologies are rolled out for different compliance functions. So we do generally, like others have said, start small, make sure you build a solid foundation on both sides, and then look to branch out from there.
One of the next things I wanted to sort of introduce was this concept of integration. I find that there's technical challenges to say the least, weaving new fintech tools into existing core systems, and I think that's really one of the central questions banks generally have is how close is your system core to ours, and community banks often rely on a number of different platforms and expect any new solution to sort of plug right in. So I wanted to discuss sort of this modular or phased approach to minimize disruption and avoid some common pitfalls. And Sam, I'll start with you. From your experience, what sort of incremental modernization practices help banks adopt new fintech capabilities smoothly without unexpected downtime or
Yeah.
errors?
It's a good question. So I don't want to get too nerdy there, but a lot of it to me comes down to the architecture decisions that are made and selected upfront, how we're going to design the software that we want to try to put in place to solve these problems. I come from a background of really kind of approaching things with, not that this is the only way to do it, but the way that we do it here at Afterman is distributed systems type development with really kind of event-driven architectures. What that allows us to do is very, very small components that are kind of business case specific that act as adapters to those legacy systems in very small capabilities, one at a time. So meaning like putting an adapter in place for just one part of one payment rail, or for just one particular function on the core or something like that. We spend a lot of time trying to introduce middleware, with the real goal being that if we can introduce middleware that the bank will ultimately control and own, and that their IT team can eventually take over from us, that they will own that, and that they'll then own their journey and the fintech's integration with them, regardless of what legacy things are going on, or regardless of how they choose to replace those things later on. So I'll give you just an example. Is we for one of our larger clients about a year ago, we integrated or we wrapped some middleware that was exposed to fintechs to expose their wire capability, so the fintechs could use their wire rail via API, and that was using a legacy provider. As we've adapted and grown, and we've actually started switching to a kind of newer, better provider for that payment rail. What we've been able to do, because we own that middleware and because we own the bank, right? Have full control over all of that. We've been able to put in things like feature flags at the account level, things of this nature, right? To say like, we're not even going to do a big bang from the legacy provider over to this new provider, right? We can now do it like on an account by account basis, or just for certain partners, or things of that nature, to really kind of minimize the risk, minimize the disruption, and make sure things kind of go as smoothly as possible. So yeah.
Yeah, one of the themes I'm picking up on, and we can expand on this at some point as well, is this whole crawl, walk, run. We talked about starting slow, but then also the beginning of your sort of comment was really just almost not just a technological integration, but also the cultural integration. You're having actually boots on the ground to actually communicate solutions. So Lisa, just going to you as well, what integration challenges have you encountered to sort of slow down not just the business, but the partnership as well?
Right. So, to circle back to some of the stuff that we were talking about initially, the goal here is to see this as an opportunity for business growth and enhancing revenue. The last thing anybody wants to be seen as is just a cost center or a cost. And so I think that is often what comes into play with how fast you can actually move forward with an integration. And I think some of the way to overcome those pitfalls starts with sort of, procurement teams, vendor due diligence, like making sure that you can show yourself to be the best, most skillful as you possibly can. And I like this, walk before you run sort of approach, but also showing it as I do have the capability to run. Then it comes to having the conversation, which I think, Sam, is exactly what what you've said, which is a lot of these tools require connectivity with existing technology. You can't just assume that your solution is going to be prioritized. So it really comes down to making sure that you've gotten in front of the right people to have a conversation and figure out, like, where do you sit in the technology tools and growth of the organization, and how do you get yourself into that position of priority so that you can get to implementation faster. And the more you can articulate the operational efficiencies and how you're not just a cost, that the better it will be. And then as far as the fintech partnership, being also able to articulate why and how this is actually going to smooth your ability to, if you're someone who goes out into the market and needs investors, if you are someone who has a lot of audits, if you're someone who has a lot of, licensing that needs to be done, how does this tool actually, at the end of the day, even if that's not its core purpose, actually helps with those approaches?
It's great. And a guy, just to show Blee some love as well, how do you sort of ensure that sort of seamless connectivity on your guys' part as well with current workflows?
We've seen it firsthand where you have the conversation, around AI and everything is exciting with AI, but then the sort of workflows and integrations are sometimes, overlooked. And it's actually, a great opportunity when you think about AI to also think about those integrations, those workflows in the context of bank-fintech partnership, multi-tenancy, and how do you think about those? And so it's been a big, investment for us as part of the journey. And we get a lot of questions from different workflow tools. This fintech works with Monday or Jira or Asana. How do you integrate with all of those? And you've got to be ready to answer those questions, because if not, you're essentially adding more work to something that's supposed to be all about efficiency. So having the documentation, having done that before, having the right partners that can help if it's really complex integrations are things that, in my opinion, should be part of the conversation early on, just as much as AI and accuracy and all that conversation is going on as well. And then, you should also think about the specific sort of subject matter. In our case, if we're looking at content, we have to think about Figma, and we have to think about Google Docs and all these areas, and Frame.io or whatever it is that our customers are using, because we don't want to add friction. And I think it's a sort of rule of thumb that if your vendor is introducing friction, that's a bit of a flag. And so for us, it's something that really keeps us up at night, is that how do we reduce another element of friction in this partnership?
Yeah, that's a really, really good point. An obvious one, but one that folks I don't think about often enough. And Mooorari, I know, you in a previous life you were in-house, and now you're advising fintechs and banks on vendor management and other facets of the partnership. Any thoughts on sort of what you sort of advise on a day-to-day basis to mitigate these risks?
Yeah, and that's where the in-house experience really comes into play. Anyone who's ever tried to replace a legacy system or integrate into a legacy system and tried to connect even definitions of data and terminology between the two, and then there's this sort of desire to go big bang and switch over from one system to the next. And I think a lot of these new tools, the modular approach, the integration approach, provides a lot more facility in terms of moving more gradually, more sort of in a way that doesn't slow things down from legacy to some of these new tools that they can be developed and modified sort of much more quickly and efficiently, especially when you have AI sort of helping with the code and so forth, which can delay things, obviously. I think that sort of the big takeaway, bridging both the in-house experience as well as the outside counsel experience, is that so often, if you've been through one code freeze or anything like that, just getting the IT group involved early and often. I mean, we always talk about getting legal involved early and often to make sure that, you don't have any hiccups, when you're about to launch. But often I find the IT team, the IS team at various companies can be really helpful if they're brought in soon enough into the process. And the silos that sort of develop within companies, vendor management does its thing, legal does its thing, audit, whatever, does its thing. It's especially for bank fintech partnerships, where a lot of those things, there's a lot of upstream and downstream impacts based on new ways of doing things, new technologies being brought in. And really, this has always been true of vendor management, but when you can bring those things together, and what you find is, especially with technology, having the IT team sort of lead the way, or the information security team lead the way a little bit, because then you don't have the sort of code freeze at the last minute that when you're about to launch or implement and things like that. So those are you know, kind of one of the things that I try to advise people on, just based on personal experience, as well as just a long litany of examples where having IT involved early has helped get the process implemented faster.
Thanks. So we've covered, you know, this adoption piece, right? We've covered this integration piece and sort of the pitfalls that might ensue. I wanted to sort of move the discussion onto actual real-time oversight and auditability. So because once integration is live, the next priority is usually the continuous oversight. You know, instead of scrambling for to pull reports at audit time, modern platforms can maintain sort of organized logs, dashboards, automated alerts in real time. So let's sort of discuss that part of it. And Lisa, I want to go to you. How have sort of the expectations around continuous monitoring evolved, and how do you reflect those changes in sort of your oversight processes?
So it's a very good question, because it starts to get even more complicated, because in the sort of the normal day-to-day back and forth, I think there's more real-time communication between the bank and its fintech partner. And so now you layer in a piece of, you know, an additional piece of technology that is going to be a tool that helps with communication or analysis, or, you know, or making sure that you get things out the door. And you need to appreciate what is already going out and what is already moving back and forth. And so how do you make your reporting more meaningful? You know, I think what we're gone are the times that you wait till the end of the year and then you look backwards and figure out what you did. So for sure, you need some type of more consistent reporting. It doesn't always have to be in real time, but it needs to connect with what is being reported in real time. So I think that's what becomes the challenge. And I think, you know, I think Sam, you and Guy both mentioned the workflow tools and the connectivity with other, you know, workflow platforms that folks may use. Like we need to be able to use the same language. We need to have data points that you know exactly where they're traveling to. We need advance notice when you make changes to how your platform works, so that we can then make sure that the various audit points you know, are still speaking to one another. But you know, to the extent that things are hard coded in legacy systems, they may not be as nimble to just change. So when you use the full name of a company and then, you know, switch to a abbreviation for a company, for example, that can wreak havoc. So I think it's those types of sensitivities as you bring in tools. And I think that's where AI can also be very helpful, in that it can recognize and, you know, sort of come up with differences and harmonize them and make sure that you get to the right place.
Yeah, that's a great point. And so, Sam, just speaking of Afterman, what, you know, for that software, for that system, what monitoring or reporting integrations from sort of legacy systems have you found to be sort of the most effective in supporting real-time or not real-time incident detection and responses?
Yeah, so there's monitoring and there's reporting, right? And we'll start with monitoring, I suppose, because it's probably more in line with really what you're, I think, truly asking. Unfortunately, legacy systems and financial legacy systems, a lot of the ones that I've worked with, a lot of the cores that I've come across, they're, not to pick on anybody, but just notoriously bad at this. I'm sure anybody who's been working in this industry for any amount of time can relate if I say that I've had incidents where I was woken up or disturbed on vacation because we were 3 or 4 hours into an incident and the vendor didn't even tell us, because they didn't know until the bank's customers started reporting to us and we had to call them, right? Kind of thing. It's in a pretty sorry state, I think, across, you know, some of the core vendors, unfortunately. I think what I've been trying to drive and what my team has been trying to drive across every client that we engage with is not just how can we make that better. I think that's we can do better than that, right? We can certainly find things out, you know, before the vendors call us. But how can we be proactive? How can we even detect things before they even go wrong? How can we be proactive versus reactive in some of our monitoring? So I think, again, this points to my very, very firm belief that I think that any community bank that wants to work with fintechs is going to be in a better place, realizing my own bias here, if they own some of their own middleware and don't just rely on vendors to come in and just hook things up directly, because it affords opportunities to be able to step in the middle and start to put metrics and analysis around some of their flows, not just around financial data, but around when did the request come in? How long has it been? Has the vendor responded? Did we get the ACK back? Et cetera, right? Like, be able to kind of follow that through. And I'll just give you some real world examples. So this is not like high level generic puppet show, right? Is like, you know, some examples of things that we do in real life is like on our RTP integrations, we will actually ping the clearinghouse every couple of seconds to make sure the connection is live, to make sure that we can actually reach the MQ server, right? Like, let's not wait until a payment fails to come over and somebody tells us to figure out the connection's down. Let's actually be proactive and let's actually report those pings back so that we can ensure that things are up. For things like sending payments out to a legacy provider, back to that wires provider that I was talking about earlier, legacy integration, sadly, it takes them 8 minutes sometimes to get us an ACK. When we send them out a payment, it takes them 8 minutes to respond to us and tell us we got the ACK, and sometime longer than that to get us back an ACK 2 and an IMAD and NOMAD, right? But the point is, we're able to predict now and set this is a reasonable SLA. 8 minutes is how much we expect before we, and if we start to breach that, let's not wait an hour for the customer to notice that their wire hasn't gone through. Let's actually start reporting and alerting on that right now so that we're responding to the incident before the customer ever even knows that anything went wrong, if that makes sense, right? So these types of things have really helped us in a lot of cases. I'll tell you, we've had Azure outages that we've survived. We've had, you know, other outages from vendors that we've survived. And in every single case, we've not lost a single payment. We've not lost any data. We've not lost any messages because the durability of our underlying architecture prevents all of that. But on top of that, we were able to detect from this kind of proactive reporting and not waiting for a reactive call. We were actually on the call before the business knew there was anything wrong in every case, right? So.
Yeah. Guy, you were nodding a lot, so I'm going to come to you to sort of follow up on any sort of comments to what Sam was saying, but then also sort of answer, like, how does Blee as a platform deliver sort of live audit-ready outputs that might sort of replace sort of like traditional, you know, end of period scrambles that might ensue?
Yeah, I think the thing that's in common between monitoring, reporting, and audits is that the expectations are changing, and part of it is because the reality is changing too. So if we start with monitoring, we have a monitoring product that, you know, look at anything that's post-production to make sure that things are right. Now you have, on one hand, the centralized world with affiliates, with new channels going on. So there's a lot of things out there. And then you also have a speed of creation of content and how fast it can get out there and potentially do damage. And so you cannot rely on software that's only once a week or maybe, you know, twice a week, and maybe it takes them 12 hours to let you know about it and the remediation flow doesn't work right. So the expectation is we need something that is much more real time. And so when you build a platform bottom up, you have to build with this expectation. And so that's how we think about monitoring. And it's challenging from a technical standpoint, but I would say table stakes at this point. And then if you look into reportings, it's kind of similar. The expectation is we cannot just have once a quarter report that in a very strict format and that's it. We want to be way more specific so we can identify the problems, especially when we're dealing with a lot of partners, growing numbers that are doing a lot of different activities. So we want to know who's having more violations than others. We want to know, you know, who's potentially not answering remediation emails, and maybe we need to escalate. So you want to be able to have that that real time. And I would say even when it comes to the audit trails and the audit reports, those are also, you know, people are asking a lot more questions. can we trace the comments? Can we trace these? Can we add, other lines that maybe we're not used to have in our audit trails, but are really meaningful when we have so many parties? And so having that flexibility to support these different elements, I think is really a requirement today from every vendor.
That's great. And Mooorari, from outside counsel perspective, just focusing on the audit piece, how do you negotiate on behalf of either their bank or their fintech, sort of that aspect of the agreement?
Yeah. Well, historically, I mean, it's, you had a sort of an annual audit or, some sort of cadence to the audit. And it would be broken down into different areas of focus throughout, whether it was marketing or underwriting or whatever the case may be, a variety of things. I think the lesson of certainly the trajectory, but the lesson of the most recent enforcement actions, many of them against banks, is that real-time oversight is kind of becoming just absolutely a requirement. It's not a nice to have. It's not something that can really be avoided. And it's really for the protection of both the fintech and the bank. I don't think it's like, the contracts sometimes read as if the bank is sort of the only one sort of impacted by this, and they're the ones and that's why it's in there. But it really kind of goes both ways, because if you have a system that provides more real-time access, both sides are then looking at the same real-time information. There isn't some sort of processing that's happening or taking place before it goes from one side to the other, and the back and forth that sometimes can lead to more of a game of telephone than really sort of what the real issue is and getting to the end result. And I think what you're seeing more and more of is fintechs realizing that the more that they can incorporate tools like the folks here are talking about, the more they're going to be able to get ahead of the bank and really sort of provide some insight so that the bank's formulation doesn't become something that needs to be rejiggered or customized, purely for the fintech. If the fintechs can get out ahead of it, then they're finding sort of opportunities that even enhance the bank's visibility and oversight in a meaningful way, which of course makes regulators very happy and keeps them at bay. And then ultimately, when you do have incidents and so forth, you've built up some goodwill, not only with each other, but also ultimately with the regulators, because you've shown sort of this ability to flag issues early and so forth using technology like the type we're talking about here. So I think really the lesson or the what we've learned over the course of at least a full decade, if not more, of the evolution of these relationships and how regulators, both bank regulators as well as other regulators, have started looking at this, is that the more we can get to that real-time oversight and information flow, the better. Now, there's some things that are, need to be more closely guarded. I'm sure, things like model validation and things like that need to be audited, probably have to go through at least, there's a smaller group that has access to that type of information and things like that. But ultimately, even that information, I think more and more fintechs as well as banks are becoming comfortable with sharing that information in a closed environment, in a safe way. And these technologies absolutely help with the security of those things too. So I think getting true, accurate information on a timely basis is really where a lot of these negotiations have gone over the years. And what used to be a somewhat contentious debate around audit is becoming much more routine, is what I'm finding.
That's great. I wanted to sort of focus a little bit more finally on sort of the risk appetite for customization or sort of offering like a bespoke program and sort of the pilot approach as well, even though we've talked about it a little bit. And Guy, I want to sort of come back to you. How does Blee tailor its sort of risk setting, so to speak, for each customer? How do you adjust those settings as sort of regulatory and strategic conditions shift as well?
Yeah, we see it as almost the evolution that's happening where back in the day it was like one size fits all, but you do realize that there's sort of a threshold right now, but then there's also different risk appetites at different times. And we work with, Fortune 500s, we work with banks, we work with fintechs, and risk sort of change over time. And so being able to have that sort of flexibility embedded in your platform is something that we spend a lot of time on. And I think that, one area that we saw growth is what we call legal engineers, is that we have actually legal professionals that are working with our customers on adjusting the rules or making, changes based on some regulatory changes that we've seen or enforcement actions. And so we're really trying to be much more sort of live dynamic product versus something that is just give us 100 words and we'll, cross match it with something and hopefully something will show up. The world is turning more contextual, and therefore every company, every bank, every fintech should have their own specific risk profile. And they, would want to validate that over time and make sure that it stays this way. Many times we work with our partners and proactively tell our customers, hey, maybe we should make some changes to the rules because this is coming. And so it's a very exciting time from a, product perspective because you can sort of evolve with your customers.
And so on the other side of that, Lisa, can you maybe share some examples of an instance where you've had to adjust sort of the risk parameters midstream, and that's sort of proved essential for like success of the partnership or the business as well?
Sure. And I was trying to think of a good example that might be something that's recognizable to most folks. And so the one that I can think about that I think should resonate with most people is to really highlights this is think about sort of fuzzy matching on addresses, right? Everybody buys something at some point and you put your address in and then it comes back and it says that, is this your correct address? And usually it's something like, Lane, LN or LANE, and how does your fuzzy matching work? And I sort of liken it to that's what we're talking about here. You go in with the, whether it's a proof of concept or an actual pilot, you've got a set of rules in your mind, how you think it is going to work. And sure, we can have all sorts of change from a regulatory perspective, and it is incredibly helpful to have knowledgeable people who have some insight, a forethought before something happens. But it's something the only constant is change. So we're pretty certain that something will change. So when you start noticing it, first of all, you need a system that notices that you're getting sort of weird results. So that whole thing about how many times am I failing to recognize an address because something is picking up lane as LN or road as RD instead of being fully written out. And then how nimble is your partner at being able to pivot and try and help you address that. And I think that's, in terms of, real life examples, that is constant. And that's what you're looking for in a partner. So I think that's a lot of what Guy has described as that, sort of their approach to it. And then the other piece that often sort of impacts this is doing something, making sure that you do some QC work with your implementation, because we're talking about folding something into what may have some very complex legacy systems, and you may end up with some very strange knock-on effects. So I think that the key is to make sure you have a nimble and knowledgeable partner, but it also is maybe, sort of really reflecting on how is it working? How is that data performing? Is it as expected, or are you getting some sort of weird results?
That's great. And Sam, for Afterman, I guess, how do you sort of architect pilot integration so that risk controls can be scaled or modified later?
So I want to actually expand upon what Guy said, because risk does change over time, right? It changes, risk appetites change all the time. And I think what it becomes for an integration partner like us to understand is, what are those levers that you might want to pull? And you might not, even the risk people might not know them all up front, but we want to start with that conversation of what are all the right levers that we need to build into the software, build into the integration, build in the middleware up front, so that you have them to pull later. But to expand upon Lisa's point, maybe they don't know them all. Maybe some market change event happens at some point later. We need to be nimble enough to be able to go back in there and put in a new lever quickly and rapidly, so that they can make those changes as they see fit. A lot of this draws back to like the feature flag kind of stuff that I was talking to earlier. So when we architect a lot of our solutions, we're building in feature flags and switches that can be thrown on all sorts of different layers. We need to understand, though, from like our risk partners, like, what are the levers you're going to want to pull, right? Is it on limits? Is it on, what's it on, right? So that we can give them all the right tools later on.
That's great. So we've been having this sort of what I consider to be like a quantitative discussion, and I wanted to sort of round out part of this conversation with more of like, as Bank-Fintech partnerships evolve, sort of the cultural collaboration component of this as well, right? Open communication, shared governance, clear performance metrics, to keep both sides aligned, going forward. And so, Lisa, I want to start with you a little bit. It's just which performance metrics from your perspective, and Guy, feel free to mute or whatever you want to do, but what performance metrics matter most when evaluating a fintech partner at the end of the day?
So I made a list, but now that we've been having a conversation, I might add to the list. But I think the way I'd start with it is sort of as I think of it, sort of safety. Safety meaning like culture of compliance, wanting to reduce risk, not adding new risk to the to the relationship. We've talked about this a little bit, but stability and accuracy. So we need to be able to rely on the solution, and then responsiveness. That goes to some of what Sam talked about knowing about outages for connected partners before things even happen, and sort of jumping right in and trying to resolve things. I also think about speed, and that includes sort of the user experience, the ability for something to be plug and play, super usable, as well as the speed in reporting, which I think we talked about in terms of like how much real-time information do you need, or logs and that sort of stuff. And then much of that actually gets written into a contract as part of the service level arrangement. And it's, I think that's important, and that supports how the service, just to sort of wrap this back up to where I started, which is that I just want to make sure that this is, just as the bank partnership model is a partnership, you want these types of interconnections with another fintech to be just that as well, a partnership. This should be additive, not just a cost. It's a benefit that's supposed to help facilitate growth for the business. So any metrics could be added to that sort of helps us move towards growth.
It's fantastic. And you mentioned contracts and SLAs. And so I'm going to go to Mooorari to sort of pivot to that, scenario. Like, what are you advising our clients when it comes to making sure that certain metrics are met? What kind of feedback do you provide in those agreements? Have they evolved? I'm sure they have, but anything on that?
Yeah, I mean, well, from a qualitative perspective, I mean, some of it is, just understanding the user experience, what whether it's surveys or what have you. But having a regular dialogue is like, oh, how are we feeling about this and so forth. It doesn't need to be, it's like a sentiment, right? I mean, it's an important part of this evolution. So even though it seems somewhat old school, it does from a qualitative perspective, actually talking and meeting on a regular cadence is still super important to maintaining the relationship and making sure these tools are evolving as necessary. Ultimately, I mean, you do need to create some measurements that work. And I will say that as much as I think at times that we're moving towards certain standard SLAs and so forth, it really just kind of depends on really sort of what the experience is of the fintech and of the technology provider and the bank as to what they want to focus on and so forth. I think more often than not, unfortunately, they figure it out sort of what the SLAs would need to be after they've started, which is fine as long as you start with sort of low risk kind of opportunities and then build from there. But I think, a lot of times we find ourselves having to build the SLAs after the relationship has maybe, matured after 6 months, a year, maybe even 2 years. It's like, hey, we need to work on this. And more, we're seeing them sort of, be both compliance oriented as well as financial oriented, right? I mean, that's a lot of what the contract negotiation revolves around. It's like, are we getting the value out of this that we want, not just from a compliance perspective, but are we actually generating the profit in a compliant way that we had anticipated? And so I think what's wonderful about these tools is that they can actually do both and synthesize the information nicely and relatively quickly for both sides to sort of to look at. So I mean, it's hard to say that we've landed on a set of SLAs or a set of metrics that matter or work, but it's true that you're starting to see a little bit of homogeneous data sets that evolve from these relationships based on sort of experience of folks. But ultimately, the human engagement part of it is surprisingly so still important in both creating that culture of compliance, that discussion, that language of compliance, that not only makes both sides feel better that they're on the same page, but ultimately it's the roadmap that you show to the regulators to say, look, this is how we go about making sure that the code matches what our risk appetite is, what our actual, these are the metrics that we are focused on, but we're also looking at the relationship holistically.
Great. So let's go to Afterman and Blee as well from there for your guys' perspectives too. So Sam, we'll start with you. How do you sort of track that integration performance for yourself over time, sort of to ensure that you have these iterative improvements over time?
So it's a good question. I think there's to draw on Lisa and Mooorari's points. I think it really starts with defining what those SLAs are and what they're really supposed to be. So really for us, it starts around getting with our business partners and even trying to figure out what are the questions we're supposed to be asking and sourcing from this data for you in order to gauge the success of this integration. What defines success? What defines risk? What are the right questions? And that's going to be different for every integration. It's going to be different for every opportunity. Maybe there's some commonalities that run out across. And to Mooorari's point, maybe there's like a common kind of sheet that's coming to be. But I would imagine that as new opportunities come along and more innovative products come along and financial products come along, they're going to have metrics and SLAs that maybe we never thought of before, if that makes sense. So I think really this starts with, for me, at the outset of each engagement, what are the things that we're actually looking to measure so that we can measure them. From there, again, if our job is to come in and to put some middleware in between the fintechs and the legacy systems to shepherd all these transactions in a compliant way. From there, if we know what SLAs we're managing and monitoring, and we know what we want to report on, collecting those data points is relatively easy. I think the hardest part is deciding what upfront, if that makes sense. So, yeah.
What about you, Guy? How do you foster sort of open communication with banks and other stakeholders, sort of to align on compliance and sort of that process?
I was writing down the points that Lisa mentioned, safety, stability, speed, and I was thinking to myself that we have, we think about it both in the sense of how much our product is, supporting these expectations. And so when you think about, for example, triaging of assets, or alerting on different workflows. Can we embed those SLAs as part of the product? And I think it's a one critical thing. And then the other part is that can we report on all these SLA expectations? And so when we're talking about open communications, is can I show up every week, every other week, whenever my partner, the bank, the fintech asks me to? And can I share those reports? Even better, can I do it automatically so they don't even need to see me? And can I give them that confidence that things are on track, not just with Blee, we measure that too, but also with the entire program for this specific area. And you can see the confidence that it gives people, the relief that they know that things are under control, things are monitored, things are moving along between multiple parties. And, there's other fire drills that we can deal with because it's always going to be, but it's not going to be this one. So that's how we think about it.
That's great. So I wanted to leave at least a couple of minutes to discuss any questions that the audience might have since we're rounding out the hour. We did get one question, and this is kind of the final Jeopardy. We'll make it a free-for-all, but I'll start with Mooorari because we kind of live this a lot of the time, and I'll just read the question out. It says, please comment on US, and this is going sort of against what we've been talking about, so feel free to opine in any way you'd like, but please comment on US regulatory actions of banks receiving enforcement orders for deficiencies in their fintech customer base. So that's for you to lead off on, Mooorari.
Yeah.
You have 3 minutes or less, hopefully.
I'll be, I think, relatively quick, but there's been a slew of enforcement actions over the last couple of years. I'd say certainly the last 24 months, it seems like, and against banks in particular. And there's no reason to think that whether they're public enforcement actions or something that's more supervisory in nature, that these are going to stop just with the new administration. But the calling out of banks on just oversight, the idea that you cannot outsource compliance responsibility, that you ultimately are responsible. We see it frequently in the BSA AML context, in terms of banks not having sufficient oversight. But it's true of many other aspects of compliance as well. And I know, we try to keep track of sort of what the hot topics are amongst regulators, but those will change over time. But the one constant is that you can't simply say, well, it's the fintech's job. You really do have to take responsibility, and that's been true for many years, not just in fintech partnerships, but in vendor management generally. While some of this may have been reinforced during the financial crisis, many years ago, it's been a constant theme sort of since, in terms of not pointing the finger elsewhere, that this is really sort of a collective responsibility of the bank as well as the fintech to manage. So I think that's the that still continues to be the rule of thumb of the day, is to ensure that from a bank perspective, you don't find yourself, are we over relying on the fintech or another vendor for compliance here? You can certainly try, but ultimately you're going to need to monitor it and ensure that you've got some real-time data, and some of these technologies that were coming online make that a lot easier to do.
Thank you. Anyone else have any thoughts on that? Lisa, you're nodding, so please.
I'll jump in. I think this sort of brings us right back to how we started the conversation. You're getting in bed with someone. You need to know sort of how their product works. You need to know what data they're using. What are they relying on? What is their culture of compliance? And how good are you at explaining? So I think that travels every level, right? So the bank is going to be asked that by its regulators. Your technology fintech partner may be asked that of its regulators. As you go on down the line, Sam, you were talking about pinging the clearinghouses to see if they were up and running. Well, okay, the process you're using to ping, like there's a service there. You need to make sure that your cloud service provider or whoever it is you're using it is also working. So I think that having a deep understanding of how your partner works, what's behind, so you can behind the technology, so you can explain it, will help alleviate some of that stress of, look, you can't give the responsibility to someone else. The more you know, the better due diligence you do, the better position you're in. And from a technology provider's perspective, it's, for all of us, for any vendor or partner, it behooves you to have really deep documentation, and Guy, I think you mentioned that as well, that you can give to folks, and really have clean due diligence material so that you can pass that information along.
That's great, Lisa. And I think we're at time, and I've been wanting to use the phrase compliance theater for the last hour. That gives me the opportunity to say that it's not just compliance theater, but it's actual compliance. So I'll leave it there. Thanks everyone for your hour. I'm hoping the membership enjoyed this panel. I know I did. Until next time, thank you.